I'm Charlotte McLeod with investingnews.com, and here today with me is John Cash, CEO of Your Energy. Thank you so much for joining me today.
Oh, thank you. It's good to talk again.
Really good to have you here. And we last spoke, I believe, about 6 months ago. A lot has happened since then in the uranium market and for Your Energy, of course. I think we'll start with the market. And one of the things we were going over last time is you told us there were a lot of catalysts building in uranium and prices looked set to increase. Definitely, we've seen that, and there's a lot of elements at play there. But for you, what do you think caused the price increase that we've seen?
Yeah, no, certainly. Since the last time we spoke, the price has come up dramatically. Seems like maybe it's plateaued a little bit here the last few days, but spot price is right around $69, $70 a pound. Long-term price, depending on what service you look at, in the low to mid 60s. So it's in a great place right now. Certainly our project is in the money. But I think what really kind of threw kerosene on the fire, we have been talking a long time about geopolitics, the risk to uranium supply. And I think the coup in Niger really opened up everyone's eyes and said, yeah, we knew the risk was there. We weren't quite expecting this particular scenario. But you combine that with what's going on with Russia, issues with getting material out of Kazakhstan. And I think that was really just kind of the issue that everyone said, okay, we acquiesce. The price does need to go higher to recognize the risk. And even though Niger only represents maybe 4 or 5% of global production, it's a critical 4 or 5%. So I think that's really was the impetus to really start moving the price of uranium up here a few weeks ago.
Right. And we've seen it move quite quickly, which is a change from what's usually happening in the uranium market. Did you expect such a quick increase, and do you think that's sustainable?
No, I didn't. I really believed that the uranium price was going to move higher, but I figured it was going to, move up at a pace that would beat inflation by a few dollars a year. But, with geopolitics and that supply risk, you never know what could impact things. And that can really cause a rapid increase in the market, as we've seen. And so we'll continue to watch the geopolitics globally, and that could have another dramatic impact on price.
Right. And, when it comes to prices, I think a lot of investors right now are really curious. They're asking questions about how high prices could go. But maybe a better question to ask is what a long-term sustainable price looks like. So curious to get your thoughts on those couple of things.
That's a really good question. And, there are a lot of companies that want to start production up and try to fill that gap between supply and demand. But when you take a look at those companies and projects, and by my count, there may be 19 projects that the owners have said they would like to move toward production. But mining uranium is a tough business. And I suspect probably half of those projects won't be brought into production in the next few years. And even the other half that are brought into production in the next few years, probably most of them are 2, 3, 4 years out. And even assuming they get up to 100% production, it doesn't backfill that supply gap that we've seen develop over the last few years. So I think there's still a lot of room for the price to move. The price needs to move with respect to inflation alone, let alone with the regard to supply-demand issues. So, when we look at where could the price go, I really think the long-term price needs to be in the 70s to 80s to sustain a production level with Tier 1 and Tier 2 assets that are necessary to backfill that demand. So I think that's where we're headed in the future, and I think that's where we have to stay to sustain production at where it needs to be.
Okay, and speaking about production, so a big milestone for Your Energy, I believe this past May was Lost Creek going into commercial production. So we want to make sure to talk about that. And what I was wondering is if you could give an update on the company's current sales contracts.
Yeah, sure. So we made the decision earlier this year to ramp up production at our Lost Creek property based on the contract book. We were able to sign up some contracts, and we now have 3 really good, solid, long-term contracts in place. They are base price escalated. The contract book starts this year, so we've already been making deliveries into that first contract and have some revenue there from that. But things really kick off next year, where the contracts go up to 600,000 pounds next year, and then 700,000 pounds the year after. So all in, the 3 contracts we have right now, The total quantity is 3.75 million pounds over a 6-year period. And that should give us a revenue of around $220 million on that contract book alone. Now, it's interesting that that contract book is really nice. It's real solid, but it only represents about 25% of our licensed capacity. So 3/4 of our licensed capacity, we've not contracted out yet. And as the price moves higher, we look to layer in more contracts, and we're looking to get more market exposure with a solid floor to protect the company. And right now, it's a seller's market, and we believe we're going to have some good success continuing to fill out that book over the coming months.
Right. That's exactly what I was going to ask is putting the existing contracts into context compared to capacity. So when you talk about that 25%, is that for Lost Creek or is that also including Shirley Basin?
Yeah, that includes Shirley Basin. So Lost Creek, the mine there, it has a licensed capacity of 1.2 million pounds per year. And then at Shirley Basin, the capacity there is an additional 1 million pounds per year. So Shirley Basin, we have not built it out yet, but we have all the licenses and permits we need. And we're really waiting on the market a little more and contracting. We'd like to layer in a few more contracts to justify building out Shirley Basin. And when we make that decision, we're estimating it will take about 2 years to build it out and get initial production, commercial production levels from that facility. That seems like a long time, but what we're seeing is supply chain matters, specifically with electrical equipment. So we think it's going to take a year to maybe as much as 18 months to get that equipment in place. And then once we have it, it'll only take about 6 months to build out that project and get it into production. It's only a satellite facility. The capital cost is relatively small, only about $35 million. So we're excited to jump into that. We're just waiting to layer in some more contracts. And as I mentioned earlier, we think that's going to happen. I know that's a forward-looking statement, but we're very optimistic with the number of RFPs that have been coming out, and we're going to have success going forward.
Well, and I'm glad you mentioned the timeline there because it does illustrate that this can't happen overnight. So that is good to go into. So talking a little bit more about contracting, you mentioned this is a seller's market. So I was going to ask if you're starting to see any urgency among buyers and if you're approaching contracting in a different way at all in this environment.
Yeah, absolutely. In September, the WNA conference was in London. A lot of people attended that, and that seemed to kick off another cycle of buying from the utilities. Since then, we've received a number of RFPs and responded to a number of RFPs from utilities around the world. And we're expecting numerous more RFPs between now and the end of the year. We also have another NEI meeting coming up in Charlotte here in a couple of weeks. And we think that might be an opportunity for the utilities to gather a little information that they need. And once they have that and discuss operations with mining companies, we suspect that that'll put them back into the market and they'll be looking for more pounds. So definitely has turned into a time with a lot of opportunity and where the price is headed and the lack of supply. And it's very clear there's a lack of supply. It really is a seller's market. And we've been able to negotiate different terms than we've seen in the past. So, it's a good time to be working with the utilities and layering in contracts.
Right. And the other angle that I wanted to touch on when it comes to contracting is are buyers willing to pay a premium right now for material from safer jurisdictions such as the US, or are we heading into a scenario where really they will pay whatever amount from anywhere?
Yeah. So, no, I think we're still seeing that premium for North American or safe jurisdictions. Certainly our first 3 contracts, when we signed those, they were considerably higher than the published price for the long-term price. So that made us very happy, of course, to be able to get that premium. So going forward, I think we're going to continue to see that premium. That premium may fall off, though, as the price gets higher and higher, as there's a greater and greater shortage going forward, because the utilities are going to say, hey, we'll take those pounds from wherever we can get them, but we'll see how that plays out.
Okay, you answered exactly what I was getting at there. So thank you for that. So the other thing that I wanted to touch on when we're looking at Lost Creek going into commercial production. So in that report, you mentioned that there were challenges surrounding recruiting personnel and contractors. I wondered if you could say more about that. I was wondering if it's related to a skills shortage in the industry or any other points you would add there.
Yeah, unfortunately, this seems like a problem all over the world. We're hearing in Canada, certainly a lot of companies here in the U.S., even in Europe, that finding that skilled labor and just hourly labor, unskilled labor, is quite challenging. So it's not unique to Wyoming. Our unemployment rate here is right around 3%. So we're competing with oil and gas and other mining companies here. Fortunately, we've hired our staff. We're fully staffed now. We're still growing our contractor base, and we've got a little ways to go there, but it was a struggle. And maintaining the staff now is one of our biggest challenges. Keeping people happy, keeping them here, so that there's not job hopping. We're trying to avoid that. And so, yeah, it's a challenge everywhere we go. But it seems like it's in our rear view mirror now, but we'll have to stay on top of it.
Fingers crossed. All right. So, one thing I've heard you talk about in other interviews, I don't think we went over this last time, is the company's interest in M&A. So I wondered if you could go into that a little bit. I'm not sure if there's very much you can say, but I'm curious about the criteria you might be looking for in terms of making potential acquisitions.
Yeah, no, I'm certainly glad to talk about that. Of course, we can't talk about any specific discussions or negotiations with counterparties, but no, we're looking to grow the company through M&A. I should comment on Lost Creek. We have a lot of opportunity there to grow the resource through exploration, but we already have a 14-year mine life. So bringing in another £1,000,000 through exploration really doesn't help the NPV very much. So we're looking to grow the company through M&A. The criteria, it's got to be a quality property, and it likely needs to be a uranium property. We are a uranium mining company. That's all we do. We prefer it to be in situ, and it has to be in a good jurisdiction. So I think we're perceived in the market as a value play, and we certainly want to maintain that perception and that reality going forward. We don't want to make acquisition of properties that we can't put into production in the near term because of low grade or jurisdictional problems or permitting issues, anything like that. So we're after quality assets, and that's a hard slog. We've been looking hard for about 18 months now, and we'll continue to look. We'll continue to talk to other companies and see where we can do something that's accretive. But so far, that has not borne any fruit, but that doesn't mean we give up. We'll keep looking.
And if we expand that to the uranium market as a whole, do you think this is an environment where we would see M&A across the sector? Because I always think about it as being quite a small market with not a lot of players. So yeah, how do you see that?
No, you're spot on. It is a very, very small marketplace with very few players. Certainly, there are a lot of micro companies, juniors that are trying to jump into the space because it's so exciting. We get inbounds probably on a weekly basis of, hey, do you want to sell that property or do you want to sell us that property? And we can utilize that to start a new company. And those discussions don't go very far because we really don't want paper of a micro cap junior. We're looking to produce our projects, not sell them. And so, yeah, a lot of people are jumping into the space. So I think from that regard, you probably will see a lot of M&A from the tier 3, maybe into the tier 2 companies, but probably not so much M&A between the tier 1s that think those are well-established companies, and maybe a little bit in the tier 2, like I said. But yeah, we'll see where the things go with the higher prices. It definitely adds a lot of excitement, brings in a lot of new faces into the industry, and a lot of opportunity for M&A, like I say, especially in the tier 3.
Very true. And I think last comment on activities at the company. So during the time we spoke last, you had mentioned some R&D efforts that Your Energy is undertaking when it comes to lowering the company's environmental footprint and production costs. So I know you've been really busy with a lot of other angles, but are there any updates that you would share there?
Yeah, perhaps one update. We have the provisional patent now has been published for our well casing methodology. So it is still provisional, has not been approved, but that is out there now. And so we're happy, that is moving its way through the government review process. As far as practical development, R&D right now, we have limited bandwidth. So we're really focused on ramping up production at Lost Creek. But as that moves along and we get deeper into that, we get more pounds flowing through the plant, we'll turn back to research and development and continue on with that well casing technology. We're through phase one testing. We need to move into phase two testing. And we'll also pick back up on the water filtration methodologies. We're always looking to reduce wastewater generation. As you can imagine, at a nuclear facility like ours, it's a mine, but still it is expensive and problematic to get rid of wastewater. So we're always looking to minimize the generation of wastewater.
Okay, so that will be something to watch for. Now, so going back to the beginning of this conversation, we touched a little bit about what's going on in terms of supply and demand, what's resulted in this recent price spike. I wonder if there's anything else you would highlight in terms of market dynamics at the moment. There's a lot going on for investors to track. So just key points that you're keeping an eye on at the moment.
Yeah, I mean, for sure, the supply itself is not growing very quickly. I mean, for example, Cameco announced that they're going to be a little short on their production from two of their big mines. I think that really highlights the challenges of uranium mining. That's a tier one company in a tier one jurisdiction with some of the best mines in the world, and they have struggles. And I think we're seeing that across the industry as it takes a while for that production to come up and meet that demand. So we're going to be watching that supply going forward. Can it really respond to market demands? And I think it's going to be slow in responding. So I think that gap that's there now is going to persist for at least a couple of years, probably 3 years before we see that begin to close. So keeping a close eye on that. Definitely keeping a close eye on the U.S. government and that relationship with Russia. There is legislation right now that is being considered that would cut off that Russian supply. If that happens, I think we can see a little bit of a price bump from that. And maybe more importantly than that is Kazakhstan, because they're a direct competitor as a uranium miner. And so we're watching the shipping issues coming out of Kazakhstan. They're running into insurance problems, shipping product out and going through Russia. They've looked for alternate routes. Those are not ideal. I think they're functional, but they're not ideal and they add cost. So we're watching all of those things, watching what happens in Niger and around the world. So yeah, a lot to keep an eye on right now. Geopolitics, production. We're watching the ramp up of nuclear power. That's really exciting. So many reactors are being built right now, and there's such an explosion of interest in small modular reactors on top of that that could really add additional demand. Maybe not now, but maybe 5 years out, 6, 7 years out. That could be a tremendous additional demand. So there's so much going on in the space right now. I've been doing this for nearly 30 years. By far, this is the most exciting time that I've seen in my career.
Yeah, usually when I ask that question, it's not one or two things, it's 5 to 10 different things that we all need to be keeping an eye on. So just to wrap it up, I want to bring it back to the investor angle. So a lot of investors have been waiting for movement for quite a long time. You mentioned this is a really exciting time. So any thoughts or advice for investors who want to navigate the market moving forward?
Yeah, sure. I believe the market's going to continue to improve over time. I expect tremendous volatility based on news. There's certainly a tug-of-war on the price right now. Seems like it's plateaued, but I think it's got considerable more room to run. So if you want to jump into this space, be patient. You're going to have to have nerves of steel to tolerate some of the volatility. But yeah, there's some great players out there, including UR Energy, to invest in. And we invite you to check us out and become a shareholder.
Very good. Well, thank you so much for sitting down today to learn about the market, the company. Really good information. So thank you for that.
Well, thank you, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is John Cash with UR Energy. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.